All right, welcome back to Is the Bottom In, folks. Today, we're diving deep into a stock that's been making waves and sparking a lot of debate, Alibaba, ticker BABA. After some recent strong moves, the question on everyone's mind is, has BABA finally found its footing? We've crunched the numbers, pored over the charts, and I'm ready to tell you what my multi-step analysis reveals. So, what's the buzz around Alibaba right now? The market narrative is shifting, and it's largely centered on BABA's accelerating cloud and AI segments. Management has been guiding for impressive growth here, and it's really starting to mitigate some of the lingering concerns from their more mature, though still massive, e-commerce business. We've seen headlines about partnerships with tech giants like NVIDIA and SAP, which aren't just whispers, they're concrete validations of BABA's significant momentum in the AI space. Even Cathie Wood has been scooping up shares, adding to the positive sentiment. However, let's not forget, this is China, so regulatory risks and competitive pressures are always in the background, but for now, the AI story is taking center stage. For those unfamiliar, Alibaba Group Holding Limited is a massive Chinese conglomerate. Think of them as an Amazon, Google, and FedEx all rolled into one, with a sprinkle of cloud computing, entertainment, and even smart speakers. They operate through numerous segments, from their core China commerce with platforms like Taobao and Tmall, to international commerce, logistics with Cainiao, and of course, their rapidly growing cloud segment. What's really caught our attention, and what management has been highlighting, is the strong forward guidance, particularly for their cloud intelligence group. They're projecting accelerated 26% year-over-year growth for external cloud customers, and even triple-digit growth for their AI products. That's a serious signal from the company itself about where their focus and future growth lies. Now, let's get into the nitty-gritty of our analysis. We've reconciled the current market narrative, which is largely bullish on AI and cloud, with the company's strong guidance in those very areas. It paints a picture of a company making a strategic pivot that's starting to pay off. We then built out three distinct scenarios to see where BABA could realistically head. First up, our base case, which we're giving a 50% probability. This scenario assumes Alibaba keeps up its strong momentum in cloud and AI, just as management is guiding. We're talking accelerated external cloud customer growth and serious triple-digit expansion in AI products, bolstered by those key partnerships with SAP and NVIDIA. We expect stable, moderate growth from their e-commerce segment. To calculate our fair value here, we started with the current EPS of $8.57, projected next year's EPS with a solid 15% growth rate, bringing us to $9.86. Then we applied a PE multiple of 20x, a slight bump from its current multiple, reflecting improved sentiment and AI-driven growth. This gives us a fair value of $197.11. I'm giving this a 50% probability because, as the charts show, BABA has been in a bull flag consolidation, holding steady, which supports this middle ground outcome of continued strong execution. Next, let's look at the bull case, which we assign a 35% probability. This is where Alibaba's AI and cloud initiatives really blast off, significantly exceeding expectations. We're talking substantial revenue growth, market share gains, and a successful monetization of their Qwen foundation models. Those NVIDIA and SAP partnerships, they become massive catalysts, solidifying BABA as a global AI powerhouse. We also assume a favorable regulatory environment, allowing the market to re-rate the stock for its high-growth AI potential. For valuation, we project next year's EPS with an ambitious 25% growth rate, landing us at $10.71. We then apply a higher PE multiple of 25x, reflecting its AI/cloud leadership and renewed investor confidence. This brings our bull case fair value to $267.81. We're giving this a 35% probability because the technical analysis shows that BABA is currently in a bull flag consolidation pattern. If it breaks out from this pattern, with the next resistance at 190, it strongly supports the idea of significant further upside, making this scenario a very real possibility if that breakout occurs. Finally, we have our bear case, which we're giving a 15% probability. Despite the current optimism, this scenario suggests that Alibaba's AI growth might not meet the elevated market expectations, or they could face intense competition globally. Increased regulatory scrutiny from Beijing, renewed geopolitical tensions impacting global operations, or a significant slowdown in Chinese consumer spending could also derail its e-commerce segment. For valuation, we'd see next year's EPS grow by a mere 5%, bringing us to $9. We'd then apply a much lower PE multiple of 15x, reflecting increased risk and a reevaluation of its growth prospects. This gives us a bear case fair value of $134.98. The reason for this 15% probability, while lower, is crucial. The technical analysis indicates key support levels at $130 and $85. If the current bull flag consolidation fails and the price breaks down below these levels, it suggests significant downside risk, which would be exacerbated by any negative fundamental catalysts. All right, let's pull up the chart because the technicals are always key here. Here's what I'm seeing. The BABA chart has been in a bull flag consolidation between 162 and 167 for the last few days. If it breaks out, the next resistance is 190. Key supports on 130 and 85. If the current bull flag consolidation fails and the price breaks down below these levels, it suggests significant downside risk, which would be exacerbated by any negative fundamental catalysts. So is the bottom in for BABA? Based on our multi-step analysis, with a combined 85% probability for our base and bull cases, my verdict is a resounding yes, the bottom is likely in and we're looking at significant upside potential. The strategic pivot to AI and cloud, validated by strong management guidance and key partnerships, is a powerful driver. While the bear case isn't impossible, its lower probability and the current technical setup suggest that the risks are weighted towards the upside from these levels. The bull flag consolidation is a classic setup for a move higher, and if BABA can break out of that $167 resistance, we could be off to the races towards our bull case target. Considering our scenario analysis and the chart, if you're looking to start a position or add to one, current levels within this 162 to 167 consolidation range offer a decent entry. If it dips, definitely keep an eye on the 130 support level as a potential strong bounce point. But given our probabilities, I'd be more focused on buying dips within the current range or on a confirmed breakout towards 190. Our fair value estimates range from 197.11 in the base case to 267.81 in the bull case, suggesting plenty of room to run. And that's our deep dive on BABA. If you found this analysis helpful, do me a favor, smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. Let me know in the comments below. Are you bullish on BABA, or do you think the bottom is still out there somewhere? I love hearing your thoughts. All right, for the record, everything discussed in Is the Bottom In is for informational and educational purposes only. I'm not a financial advisor, and this isn't financial advice. Investing in the stock market involves risk, and you could lose money. Always do your own thorough research, consult with a qualified financial professional, and make investment decisions that are right for your individual circumstances. Past performance is not indicative of future results.